afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. Positive news flow coming from trade talks between the US and China resulted in another positive week for global equity markets. On Thursday, there were reports that the US and China had agreed to roll back the import tariffs they currently impose on each other. As always, the headlines were a little light on facts, but representatives from both sides did express that progress has been made in the past 2 weeks and confirmed that as part of an initial deal, there would be tariff agreements and concessions. Whilst there is clearly progress being made, which is positive, at this stage nothing has actually been agreed and the talks are still ongoing, therefore anything is still possible and there are no concrete plans to remove any of the existing tariffs. In the UK this week, members of the Bank of England's Monetary Policy Committee voted to maintain interest rates at 0.75%. Interestingly, the vote was not unanimous as 2 members voted to cut interest rates, the first votes for looser monetary policy since 2016. Following the announcement, the pound fell, which helped lift the FTSE 100 as the majority of its revenue is generated offshore, so a fall in the pound boosts company revenue. Now, we have highlighted numerous times before, given the global economic backdrop, Brexit and the UK consumer sensitivity to interest rates, that previous hawkish statements from the Bank of England Governor Mark Carney were unrealistic. So we still believe an increase in UK interest rates is a long way off, and it is more likely that Bank of England's next move will be to cut interest rates. Now, alongside monetary policy, the Bank of England also changed its Brexit assumptions and no longer assumes an average of all possible outcomes. Instead, it now assumes an orderly transition to a deep free trade agreement that takes place over a shorter horizon. And as a result, the bank also cut UK growth forecasts by 0.1% to 1.3% for 2020 and by 0.5% to 2.3% for 2021. The change in Brexit assumptions risks accusations of political interference, as there is still a general election to overcome before there is any further clarity on Brexit. And finally, next week there is a lot of data released, and key among them are UK, German and Japanese third quarter GDP, UK, German and US inflation, and UK labour statistics. Also taking place next week are the Spanish elections and the world's biggest shopping event, Singles Day. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.